How to do zero cost investing. That's our topic for discussion today in this episode of Market Secrets Learning Series. Before we begin, I have an update for you. As part of our learning initiative, we are running multiple learning series on investing, trading strategies, algo trading, and price action trading. So if you are interested in any of it, check out our website www.marketsecrets.in. Also, we are providing multiple data feeds for our users as well. So if you are an active trader, you might find it immensely helpful. So check it out if you are interested. And with that note, let's jump into today's session on zero cost investing. Zero cost trading strategies can be used with a variety of assets and investment types, including equity, commodities, and options. I have done this multiple times using stocks, but the one I remember the most is such investment I have done on Franklin Temptlon Mutual Fund when the side pocketing was happening on the Vodafone bonds. This was a zero risk, zero cost investment. I've explained this in detail in our Telegram channel when this had happened. So if you are following us for long, you might have taken advantage of this as well. When it comes to zero cost investing, if you know what you're doing, this strategy can produce immense amount of wealth in a long run. Zero cost investing is the approach used by the professional investors to invest their money. Let's see what it is and how it works. Here is a simple example. Consider a professional investor has 5 crore rupees as his capital. As a professional investor, he knows what he is doing and will invest only in a handful of stocks, say 5 to 10 stocks maximum. Don't confuse this with diversification. That's only applicable for retail investors who wants to reduce their risk. Rich investors will always have a concentrated portfolio. In this case, consider a professional investor is investing in maximum of 5 stocks at the time. So the capital for each investment is 1 crore rupees. Let's say the professional investor identifies a stock and invests 1 crore rupees in that stock. Consider the stock is trading at 1000 rupees. So he will be buying 10,000 shares. Let's say the stock rallies 10% after a few days or a few weeks, which is his target price. In this case, the stock will now be trading at 1100 rupees and his investment would have grown to 1.1 crore. Now, the professional investor will sell the stocks worth 1 crore rupees and will pull his initial investment of 1 crore rupees out. So, in this case, he will sell 9091 shares and will leave the remaining 909 stocks in his portfolio for lifetime. Since he pulled his capital out, he can use this 1 crore rupee capital again to invest in some other stock and repeat the same thing over and over and over again and again. This will result in getting a risk-free portfolio of stocks. All his shares can now be considered to be brought for free or zero cost. That's why it is called zero cost investing. This is how the professional investor invests their money. That's why they don't have any fear even during the market crashes because there is no cost involved. They haven't invested anything in their holdings. All their holdings are based on the free shares that they are accumulated. So over the years, 60 to 80 percentage of the stocks in this portfolio will generate average return of 8 to 15 percentage year on year, and 10 to 20 percentage of these stocks would go to zero. But the remaining stocks, that is remaining 10 to 20 percentage of the stocks would be the real kingmakers. They would be the multi-baggers, which would be generating tons of wealth for the professional investor. And like I mentioned earlier, this can be repeated not only in stocks, in any other instruments like bonds, mutual funds as well. So, have you ever done zero cost investing? Have you at least researched about the zero cost investment opportunity provided by the Franklin Temptlon Mutual Fund during the Vodafone bond side pocketing? If not, why? Why are you passing on these great opportunities? Zero cost investing is one of the best way to generate a wealth. As an investor, especially as a long-term investor, you should be aware of these techniques. If not, try to read on more. And with that, we have come to end of today's episode. If you have any queries, comments, or feedback about this episode, please leave it down in the comment section. We'll be happy to answer and address it. Also, I once again request you to check out our various other learning series that are running in our website and YouTube channels. Also, check out the data feeds that we are providing. It might be a shot in arm for you if you are an active trader. Also, hit the like button if you have liked this video and share it with your friends if you find it useful. Also, subscribe to our YouTube channel and click the bell icon to get notified whenever we upload a new video or conduct a live session. Thanks for watching. Have a great day. Goodbye.